Hello, everyone. Welcome back. Today, I'm going to be talking about the top five sectors that you, as a swing and positional trader, should focus on or align your portfolio towards to generate some excess returns over the broader markets. If you're somebody who invests in mutual funds and ETFs and gets their exposure of equity capital markets through that segment, I would, request you guys to allocate some portion of your portfolio towards these sectors as tactical bets, so that you're able to beat the underlying broader markets that you're tracking. With that context in place, let's just dive right into the video. I'm not going to be doing any sectoral analysis, not going to be giving any commentary, etc. in this video, just talking about relative strength and the stocks that are displaying breakouts on their price charts. Starting off with metals, while personally I do think that this space is slightly extended, and in times when there is the inflation numbers are very high, commodities typically do well. And if you're investing in businesses or stocks which are capturing some part of that value chain, you can certainly take advantage of that. But do remain careful. And if there is any great optimism in terms of inflation numbers, your portfolios can take a beating, and which is why this is something that you should be careful about. Next one is defense. While this is not a sector, but certainly an industry group, and you can take advantage of this through any business which is capturing some part of the defense value chain, be it a software stock or a manufacturing company in the defense space. You can take those bets, do your own analysis, and align your portfolios in that way. But this is showing relative strength. This is breaking out of its stage two base and something that you can definitely focus on. Next one is CPSE. Now, since July of 2024, we have not really gone anywhere when it comes to CPSE. This is something that you can certainly take a look at because we are seeing great institutional interest now, and it's again breaking out of its stage two base. Coming to energy, right? And while I don't like to focus on traditional energy names right now because that is the epicenter of the whole crisis situation going on, you can certainly get exposure to certain green energy stocks. I would not name them. You can do your own analysis, but it is breaking out of its base again. It is a place where you can see new winners emerging from, and definitely deserves your attention. Last but not the least, capital markets. Now you have stocks, which I will not name definitely, but you have stocks which are capturing a large part of the capital markets value chain. And typically, when markets recover, these are the ones which benefit the most. And you see constant inflows in them as soon as there is optimism in the market. So it is again breaking out of its base. This narrative or story that everyone talks about, that capital market stocks are a great litmus test to see market internals and recovery, is holding true again. As soon as we saw some optimism come back into the market, you saw capital market stocks breaking out of their bases and hitting 52-week highs. So this is definitely one sector that you can take a look at. I would personally recommend that you do some value study as well. Try and understand that you're buying stocks at a reasonable valuation because a lot of them in this space are stretched, and the risk rewards don't look very favorable in that case. So while I do remain focused on price action and technical analysis, the core engine or the underlying business is extremely important, right? Stock prices are a slave to earnings. If you are investing in stocks which are not reasonably priced, you can conversely not make any money. So it's important that you look at these sectors, you track them, you find the right stocks in that space, and trade this relative strength actively and judiciously. Thank you very much for watching this video. I will see you guys in the next one.